To remain updated with the latest business news, click on the bell icon.
Hello and welcome to the Business Today show. I'm Udayan Mukherjee. In this show, we'll focus on whether the stock market has any expectations from this union budget and should it have any expectations from the budget this time around, given all that has happened over the last 1 year and so. To talk about that, I have with me Rashesh Shah, Chairman of the Edelweiss Group, Nilesh Shah, Managing Director of Kotak Mahindra Asset Management Company, and Debashish Basu, founder of Money Life. Gentlemen, thank you all for joining me today. Rashesh, let me kick off with you. As I said in my introduction, should the market have any expectations this time around? Because, the budget is a big media event. I mean, people like us make a big song and dance about it. But is it likely to be a stock market event this time around?
I think, like every year, I think what the finance minister says in the budget affects the mood and the sentiment and the expectations. I think, fortunately, currently investors are in a good mood. I think I think everybody is very upbeat, in spite of the new variant and the fact that COVID is not over. I think people are looking. They are looking beyond it. Investors are looking beyond this. So I think the mood is upbeat. The only thing that would be there is no upsetting of the apple cart. So I think as long as there is no real downside, and I think people are looking at action from the government and the pronouncement from the government to get the investment cycle kickstarted. So if you ask me as an economic watcher, I would like to see government step up on spending. I think fortunately the Indian government has got room to spend. They have not used up the stimulus in the last 2 years of COVID in a big way. So I think if the government indicates that they're going to spend, it will increase the optimism that is already there.
What do you think, Debashish? Because it is now quite established that this is, as everybody calls it, a K-shaped recovery. The bottom of the pyramid is hurting. The top seems to be doing quite well by all measures. Is it fair to expect a lot from a corporate or from a stock market perspective this time around then?
Well, the single biggest event, according to me, of the last 2 years happened somewhere in the middle of the year. Middle of the financial year, which is when we got a huge tax cut. So budget really had nothing to do. If you really take last 5, 7, 8 years of a series of events that have happened, that is the number one thing that completely changed the character of the profit and loss and the balance sheet of first the profit and loss and eventually the balance sheet of Indian companies. And it came at the worst possible time when the GDP growth rate for that quarter was just 4.2%. And that is the inflated figure. That is the recomputed GDP. In terms of the old GDP, it is still 2% lower. So it's the worst kind of a situation when you got the tax cut. So first of all, I don't think there is any correlation between what the corporate sector wants to see, likes to see, gets to see, really, and what the budget measures are. Year after year, there is this huge interest. There are tons of memorandum which goes to the government, lots of demands, all industry associations have their own list. Market has its own very, very narrowly focused thing, which is tax cut and capital gains and dividend tax and STT, and that's about it. They can't see beyond that, essentially. And then little wider perspective, which is what the corporate should be getting. But the government does what it wants to do. There are different themes in each year, but then the internal measures of any of these don't match up with the themes or what the government subsequently does through the course of the financial year. And finally, what actually events transpire, how corporates react, the external events, the international events, all that really are far, far removed from not only what the budget expectations are, but what the actual budget measures are. So I would really not put too much of weight in it.
Sure. Nilesh, there's a lot of people who say that, this time if the finance minister needs to do something, it is actually at the bottom of the end of the pyramid. Towards rural India, towards India's health infrastructure, towards MSMEs, because that's the part which has been hurting. And while there is some tenuous link to demand from corporate demand from that aspect, generally this is not the area which the corporate sector or the stock market is very focused on. Would you agree with that? That this time's budget is probably more about not the top end of India's economy, but the bottom end?
Undoubtedly, Udayan. Today, trade, agriculture, private sector investment, and government spending is above pre-pandemic. But unfortunately and sadly, consumption is below pre-pandemic. And as you correctly mentioned, it is the bottom end of the pyramid which is being hurt maximum. We are selling more SUVs than pre-pandemic, but we are selling less entry-level bikes. Clearly, government needs to step up to support consumption at the bottom of the pyramid. They did excellent job with a credit guarantee scheme of 3 lakh crore for MSMEs. But MSME cannot survive only on fixed income or debt. They need equity. How do we mobilize equity for them? How do we create reskilling of MSME entrepreneurs so that they can move from unproductive or uncompetitive, whether it's old economy or new economy, into more competitive scenario? And most importantly, can we even think of urban Manrega? In urban India, also there is a higher level of unemployment at the bottom end of the pyramid. We have seen rural Manrega or Manrega giving rural employment. Probably there is a need for that in urban India also. So this time budget has to not only support growth, but also equitable distribution.
Rashesh, how important is all this for the purposes of the stock market or even corporate India? Because, I mean, we've seen the corporate numbers over the last 4 quarters. I mean, they seem to be on a tear. And while we are talking about this misfortunes of the MSME segment or rural India, the corporate India or the big companies seem to be actually reveling in it. They're grabbing more market share from these unorganized players, and their profit pool and their revenue pool is only growing. But is there a point where the bottom end of the pyramid actually begins to bite this kind of demand growth that we are seeing? I mean, that's the key point at which the corporate sector will notice that, no, we cannot continue to grow with 50% or 60% of India hurting so much.
Absolutely. I think, as you very correctly said, I think the stock market is a very small part and a small barometer of the overall Indian economy as a whole. And though I think what has happened last 2 years, the RBI policies on liquidity, as all over the world, all the central banks, I've always seen that any intervention by a central bank, any intervention through the monetary policy helps the formal sector and the larger corporates immediately, because that's immediate. And that is why I always say we need to balance the monetary policy with the fiscal policy. The fiscal policy, what the government does, actually addresses the lower half of the economy, while what RBI does addresses the upper half of the economy. So I think the last 2 years, as all these central banks have loosened the purse strings, brought down interest rate, infused liquidity, the formal sector, the larger corporates, the larger companies have done well. And that was a good thing because it kept at least the economic wheels going. But we clearly see that consumption is slowing down in India. And as you know, consumption has been the key driver of India. So unless we revive consumption, and for that, the fiscal policies matter a lot more than monetary policy. Monetary policy works when there is a crisis like what we had in the last couple of years. But I think to revive growth and demand and eventually the capex cycle, because ultimately the corporates also will follow the consumption cycle. So we do think that the fiscal policy intervention is going to be the most important indication government can give. And it is time that government starts spending. If you look at the fiscal stimulus or so-called stimulus we have had in the last couple of years, they were also indirectly through credit guarantees and stuff like that, which all affects the formal sector. I think the direct spending by the government, there have been a few programs, but I think government needs to spend at least about 3 to 4 lakh crore putting money directly in the hands of people, which will start the consumption and the demand cycle, and that will fuel this current optimism, because this current optimism is partly based on liquidity and the monetary policy, but also partly based on expectations of growth. So if there is no consumption growth, then growth will start petering out, and that will affect all investors across the world.
Debashish, come in on this, because the key point is whether this K-shaped recovery, the larger companies benefiting while the smaller ones actually are doing pretty poorly, Is this a sustainable trend, or do you think the fact that a very large part of informal India is doing pretty badly, that actually has any ramifications for medium term earnings growth, which is what the stock market is basically pricing in today?
There are a couple of issues. First is if you are discussing stock market and the listed companies, until now they're doing very well. All right. I wouldn't say last quarter's numbers of Hindustan Lever or this quarter's numbers of PNG, etc., is of much relevance. I would like to sort of see a much more sustained downtrend to be able to come to some sort of a conclusion. So also there are so many other sectors which are still doing extremely well. So overall, if you see the stock market is interested at any time in which sectors are doing well, which stocks are doing well. Everybody can't be doing well equally all the time, right? In fact, this is a golden period of the Indian stock market where the majority of the sectors and very, very large number of sectors, earlier, if you remember, in the mid to 2000s, or sorry, about 5-7 years ago, it was just about pharma and IT, and maybe part of the financials. Now you can see the electricals, some segments of even auto ancillary, you see textiles, you see capital goods, a large number of them are doing extremely well. And all that essentially has a trickle down effect, which is what it's supposed to be. I mean, it can't be anything more than that. If the capital goods companies are doing well, obviously ancillary suppliers to capital goods will do well, and so on and so forth. So I also think that we need different kinds of data. We need really high frequency data, which is now today possible. From the credit card purchases, maybe online sales, maybe different kind of employment data, which we can get from 2 or 3 of these listed companies. Their quality of data is completely different from the earlier quality of employment data. So it's not that I've gone into it, but I don't see from the surface I don't see there's too much of alarm over here. So I don't even agree fully, at least not yet, that there is any issue. The last quarter's issue has been a very sudden and very serious increase in prices, raw material prices across the board, right? And raw material prices have affected intermediate companies like B2B companies, chemical companies which are buying commodity chemicals and processing them, so they got affected. There's no question about that. And also companies which have lower value addition. So if your gross margin was lower and you're not a high value added company, obviously you're going to get affected. To some extent, high palm oil prices would affect a soap manufacturer and so on. But that's a very, very short term. I'm not saying that it won't get worse. I'm not saying it will only get better. I'm not saying at all. But I'm saying the period is too short for us to come to any conclusion.
Okay. Nilesh, Rashesh alluded to the fiscal space for the government. I want to bring you in on this because there are only 2 ways the finance minister can move this time around. She can either say that tax collections have been good, buoyant, and therefore I want to get back to the path of fiscal consolidation once again. Or she could say that because there is money to be spent towards the lower end of the pyramid, she would need some more grace period, maybe another year, and she would keep the fiscal deficit relatively high. Which one would the stock market appreciate more? More fiscal elbow room or getting back to fiscal rectitude?
So the best thing which stock market will expect is that government becomes innovative. It is possible to spend money and yet not leave the path of fiscal prudence. The 2 options for government are to raise non-tax revenue. In divestment, we have failed every year in achieving the target, no matter what kind of market it is. I think it is time to think about divestment separately. Maybe a holding company which appoints professional managers to monetize government's holding could be a better way to do divestment. The second thing is asset monetization. We last year announced National Asset Monetization Program. Banking system is flush with liquidity. Global investors are hungry for yield. Rupee is remarkably stable. And there is appetite for domestic investors also towards higher yielding securities. So using a better innovative approach to divestment and asset monetization program, finance minister will have revenue and also ability to spend money and yet walk on the path of fiscal prudence. Undoubtedly, investors today will take a fiscal roadmap towards fiscal prudence far more enthusiastically.
I will come back and to all of you and speak about divestment in great detail. But Rashesh, I want your thoughts first on this fiscal deficit business. What are the bond and stock markets pricing in at this point in time? Do they believe that fiscal prudence will be back on the agenda, or are they pricing in that there will be extra spending on infrastructure or capex from the government, and therefore we'll have a loose fisc for another year?
I think the expectation on the fiscal deficit, given that government A has got very robust collections as well as spending has been muted. And again, I think government's ability to spend is also fairly constrained because, unit projects, there is also the capacity in the government to spend, even if the willingness is there to spend. So I think what the investors and all are looking for is government will not really spend money on infrastructure, but maybe through some social programs, stimulate consumption, and the money for that will come through disinvestment. I think we still have LIC and BPCL and all that still ahead of us. So government has a fair amount of revenues that could come through disinvestment in the coming year. I, for one, do think government is holding it back and keeping it in their back pocket because they don't need it now. But in the next year, they should use that money to spend rather than let the fiscal deficit go completely out of whack. Though I think now between 6 to 8% is now the expected range, and nobody will get spooked by that.
Debashish, what are your expectations? Because I've heard a lot of people actually make the case for government actually spending more on the investment side right now. But government investments or government spending on capex is a very small percentage of GDP. Do you really think it's very material that the government actually spends a lot and tries to crowd in private investment? Or given how well the corporate sector is doing anyway, the capex cycle should not be an issue. It should be managed by the private sector itself.
I have a feeling that this government is very conservative at the core of it, and they are not going to step forward and spend a lot of money indiscriminately on infrastructure and things like that. You're not going to have that. Number one. Number two, if you see a lot of initiatives in the business and in the corporate side are through companies. Let me give you an example of something which has become widely successful, and it should actually be a template for a lot of government intervention. And that is ethanol blending. If you see what it has done, it has stabilized the sugar prices. It's made the sugar mills absolutely in pink of health, which essentially means a huge amount of India's rural population, which used to live on sugarcane, their income has completely stabilized. It's a green initiative, it reduces emission, and the government has not spent a penny. All it has said is that I'm encouraging OMCs to buy ethanol from the sugar mills all around the country. So that's just one aspect of it. But number two, in the same way, it is now saying that I'm going to allow, ethanol made from waste. So when you say agricultural waste, it's not localized to where sugarcane can go. It can be agricultural waste. It's across the country, anywhere in the country. So the moment you now move into agricultural waste to ethanol, it's going to be another big move. And in none of these cases, the government is spending any money. And these are the kind of initiatives that we really need, where the government actually steps in to enable an environment where the linkages work so efficiently. And it's a win-win-win for everybody. I'm not saying that the same thing can be replicated in all kinds of sectors, but this is a template. It's the best possible template. But something similar is what is desirable. So my answer is in two parts. First is that I don't think the government is going to step forward and spend money because their policies are production-linked incentives, which means you reach a target, I'm going to compensate 5 years later. So ethanol blending. In none of these cases, the government is spending a penny. And that is the right strategy, according to me. Except that we need to now supplement this with, as you said, the much bigger discussion. And that is where I'm unable to understand such a bold government, so clear-headed, and why isn't disinvestment happening? So that's the third part of it.
Yeah, we'll come back to that. And your point is taken, Debashish. And Nilesh, I want you to weigh in on this, because what Debashish is saying is that you don't need to necessarily lay out billions of dollars. You can actually facilitate through a policy intervention, and which might stimulate the capex cycle on its own. That point is taken. However, there is another view or another school of thought that maybe the government needs to spend something on, say, road construction or stimulate something like real estate, which are large employment generators, and we need employment generation at this point in time. Do you think something like that may be coming in the budget or needs to come in the budget this time around?
So we have seen government spending money on infrastructure. It has almost doubled in last 5 years. Government has to spend money on infrastructure. In 2014-15, the average speed of our goods train was 25 kilometers an hour. A marathon runner was running faster than that. Today, it has reached to 44 kilometers. It has happened because there is investment in railway and there is investment in signaling and so on and so forth. On dedicated freight corridor, goods train will run at 75 kilometers an hour. So there is a need for investment in infrastructure. We are moving from infrastructure shortages in most sectors to infrastructure availability in few sectors, and clearly government will have to take the lead. But in order to support consumption, as Debashish mentioned, you can create a linkage. Now, there are crores of taxpayers whose benefits on housing in terms of loan interest or principal repayment, it has remained same since 2014. The government has fiscal space. Can you give some additional incentive to them? That surplus money with taxpayers, they will go and spend money, consumption will get supported. It will also encourage housing industry, which has far bigger multiplier effect with very less import dependency. If you give incentive for new home buying, and today stars are already aligned for housing sector, so you are actually acting as a catalyst for accelerated growth. Today, citizens of India are borrowing housing loan for 15 years at a rate lower than government pays on 10 years. Work from home has created demand for bigger houses. Affordability of houses have improved for certain segments of society. Now, on top of it, you add something in form of incentive, and suddenly it creates demand for housing, which has multiplier effect in economy. And this whole virtuous cycle of jobs, investments, growth continues forward.
Okay, let's get back to the thorny issue of disinvestment. We can't keep it away any longer. Debashish, you have thoughts on it. I mean, Rashesh's view is that the government is keeping it in its back pocket. But the evidence of the last many years is that, this is not coming out of the back pocket at any point. Huge targets are set and we achieve a very small fraction of it. I mean, this year, what is the excuse? Because we had such a buoyant stock market, so many IPOs raising billions of dollars happened, but the government could not push through BPCL, IDBI Bank, forget the two public sector banks they said they would sell, or do an LIC IPO. What is the problem, you think?
At the same time, they've done Air India, right? So I think there is the government was distracted last year on a variety of. This is my guess, all right. But because I can't find any explanation for a government that is so decisive in so many other areas, whether good or bad, is not able to. And it's not a new thing. It's not that all of these public sector companies are all 100% government owned. It will be a path-breaking first-time move. It's not that. This investment happened from 1992 onwards, and with parcels and packets and so on and so forth at that time. So I have no explanation for this except that it has been distracted, and it doesn't think that it is getting the right value, possibly. It is looking to do some kind of strategic sale. So these are the guesses one can have from the outside. The first one being the strongest, which is which is that this is really a top level decision, and the top level has been distracted with a lot of other things in last year, because I simply cannot understand why it's not being done. In fact, my concern is not so much as BPCL and HPCL and further disinvestment. My real concern would be large government organizations which are unlisted, which are facing obsolescence, which have a real problem, which is namely MTNL and BSNL. So I would really like to see some sort of a white paper which puts out that yes, the government is in these sectors in terms of investment. These are the top 5 areas, and these are our thoughts. This is what we want to do in each of these areas. And I would like to see an Air India happening in BSNL to start with. I'm not so much bothered about BPCL being, going into private hands or not.
Rashesh, I understand what you're saying with the government trying to do it tactically, but could there be another issue? I mean, we are talking about bringing stocks to the market through investment bankers and selling it at a price. Could it be that the government is facing, which something that we cannot see, a tremendous amount of resistance from maybe insiders in these companies, unions, managements, whatever, and the government is unable to cross that hump? The 2 public sector banks could be cases in point. Do you think it is something like that which is the obstacle? Because market timing and opportunity could not have been a reason this year round.
See, if you look at, I think government, like any other promoter, would like to optimize on the price. One, also the government also thinks long term, that you suddenly sell, and if those companies suddenly do very well politically, the backfiring could be a lot. I think Air India was an easy one because there was a clear public consensus that it needed to be sold, and especially with COVID and travel and all that. So I think government is also very sensitive, because what I have seen, that a lot of things like disinvestment are not just economic decisions, they are also socio-political decisions. So I don't think unions and all are the government is what worried about. Like you said, banks, I think banks are already on the mend. NPAs have come down. There is a lot of liquidity. The need for government to infuse capital in banks have gone away. In Air India, that was still there. Government had to infuse a couple of 1,000 crores every year at the very minimum in Air India, and that was hurting government. But I think either whether you take BPCL or the banks, there is no government is not having to infuse any capital in that. So I think trying to wait, optimize, see whether the timing is right, because I think BPCL can get done, but the optimization on pricing in BPCL is very high. I think on LIC there have been procedural things to do. So the reason LIC has taken the time it's taken is not due to any other reason, but LIC will happen off the block in the next 3-4 months for sure. So government has been focused on LIC. I think LIC IPO, what I read between the lines, has been the highest priority. Things like BPCL and banks have been lower priority. Maybe Air India was also higher priority for the socio-political reasons also, and the capital drain reasons also.
Okay. Nilesh, you've already given your formula for asset monetization, but you agree that in the next 3-4 months, LIC will get done, and maybe even BPCL?
As Rashesh Bhai mentioned, there is extremely high probability that LIC should happen in this financial year. A lot of work is going on, and we have attended one of the roadshow of LIC also, though they obviously didn't give the timeline, but investor roadshows have begun. So my feeling is that yes, LIC in this financial year, BPCL probably in next financial year.
Okay. Now, let's come to taxes for a minute. Is there anything that needs to be done on the income tax, capital market related income tax front, Nilesh? Either on capital gains, which most people expect nothing to happen, but also on securities transaction tax, tax on derivatives. Is there anything that is on the wish list, or there is a reasonable probability of a change?
So one market can pray for something, but in reality, I think no news or no change in the capital market taxation will be good enough. On a longer term basis, STT were levied in lieu of capital gains tax. And today, STT and capital gain tax both are coexisting. But not that market is today demanding STT removal. if it comes through, it will be a positive surprise.
You agree with that assessment, Rashesh?
Yeah, I think, as I said, I think the market sentiment is good, liquidity is good. People are expecting corporate earnings also to do well. So I think all the three engines of liquidity, sentiment, and earnings are on an uptake. So I think this is the kind of environment where actually no news is good news. I think the one expectation that not from the market, but from corporate India that has been there for quite some time is on the buyback tax. Because if the dividend tax has been removed, then people feel the buyback tax is an aberration and that should also be addressed. So if I think from corporate India, one ask that has been there has been on buyback tax. But otherwise, I think for most investors in stock market, the only ask will be there is no drama in this particular budget. It's a no drama, very business as usual budget.
Yeah. Broadly, Debashish, would you agree with that assessment that, I mean, things cannot be too much better than what it is right now in terms of corporate taxes or capital market taxes? In that sense, don't rock the boat should be a good enough thing. I mean, no news should be good news, as Rashesh said.
Yeah, I mean, it's there are two aspects. One is the principle, what should be, and one is what is the reality, what you expect will happen. In terms of principle, a lot can be done. Buyback tax, dividend tax, STT, all of these uh, are are debatable in purely in philosophical terms, in principle terms, in economic rational terms. But I guess the government is not going to listen to any of this. So, yeah, I agree. If nothing worse comes, that's good.
And Nilesh, what about the other thing which we talk about every year, but nobody seriously expects it to happen, which is wealth and inheritance tax? Anything floating in the wind, or best not to spend time on this?
So again, in wealth tax, government recognized that the cost incurred on collecting wealth tax was more than the wealth tax paid. And today on income tax side, we have seen excellent collection. On inheritance tax also, clearly, I think there is a probably space for a small beginning. Today, when NRIs inherit property in India, left by their Indian parents, they still have to pay tax in US. Now, can we take advantage of this kind of opportunity where we tax those inheritance in India, and thanks to double tax agreement, it doesn't make any impact on NRI? It's far better for NRIs to pay tax in India for Indian properties inherited to them by Indian parents rather than paying tax on America. So we can try to catch these low-hanging fruits, but no change in wealth tax and inheritance tax will be a good news for the economy.
Debashish, just a quick question on taxes on tobacco, because that's one sector which always remains very volatile ahead of the budget. Do you have a sense of which way this could be going and which way it should be going? Because, I mean, there is a lot of talk that the government is trying to align itself to WHO norms of at least 75% of the retail price of tobacco products being taxed. Do you have a sense of which way tobacco taxation in this country is heading?
No, I think that the tobacco companies have a point of view that there's a lot of smuggling going on. And the government loses out revenue on that score. So I think, and there is a very, very strong logic to that. There is a lot of data to that. If anything has to happen on the tobacco side, the government, the finance ministry has to take that data into account, really apply their mind and rationalize to ensure that the smuggled cigarettes are actually down. It's an important component. Apart from that, I'm not sure. I'm not privy to anything. I don't even have any thought on that. But I think that the rationalization part is something that any government would want to have.
Rashesh, the other thing which happens is that monetary policy watchers also, or policymakers also, watch the budget very closely, because we are at a different end of the curve this year, where interest rates are going up globally. Inflation is high in India, and there is every possibility that the interest rates will rise in India as well. What do you think will be the monetary policy takeaway and the interest rate curve takeaway from the budget this time round?
I think usually whenever there is a change in the monetary policy, there are usually two aspects as work. I think the first one is it expected or not? If there is a shock to the system, like what happened globally in 2013 when there was a taper tantrum, there was no expectation, and then it's suddenly there was a knee-jerk reaction. Even COVID, if you see the first wave, there was a knee-jerk reaction, and then there was no reaction to the wave 2 and 3. The same way, I think interest rates going up has been priced in. So in the short term, it will not create a panic or any knee-jerk reaction. If the interest rates go up by about 100 basis point over the next 1 year, I think it's in the expectations and people will be okay. If there is a sharp rise of say 200 to 300 basis points, about 2 to 3% increase in interest rate, that will spook the investors and will create liquidity crunch and all that. So I think if it's a slow, gradual rise, which is in expectations, which is in the price, which is what everybody is expecting, that there won't be any sharp, reversal, then I think we are okay because the earnings growth and the growth momentum will offset the increase in interest rates. I think even on inflation, we are all expecting interest. I think inflation will be high, and I think India needs to get adjusted to expect that inflation will remain between 5 to 6. It's still within the RBI tolerance range of 4 plus and minus 2. So I think between 5 to 6% inflation is what my expectation would be. And if it remains there and 100 basis point increase in interest rate by RBI with not too much liquidity reversal, we should be okay. If there is anything out of this, anything unexpected, then there will be a little bit of knee-jerk reaction and panic.
Nilesh, how steep do you or pronounced do you expect this interest rate upcycle to be? I mean, as Rashesh says correctly, anything up to 7500 basis points is probably baked into expectations. But sometimes, you start at one place and you end up at another place altogether, depending on the data. But at this point, what is your expectation?
So as of today, we expect the RBI to move in three compartments. First will be reducing reverse repo and repo rate corridor. It may happen in next credit policy. Second will be to change the stance from accommodative to neutral. It should happen probably in next 6 months. And then there will be repo rate increases. Fortunately for India, market has already discounted between 3 to 4 rate hikes. And at this point of time, it looks reasonable. Obviously, everything will be data dependent. Our monetary policy will also be driven by what Fed does or what our inflation number actually plays out. But as of today, we believe Indian interest rates, the market yields have discounted at least 3 to 4 rate hikes from RBI.
Debashish, you used an interesting phrase. This is the golden period of Indian equities. Is this golden period likely to remain fairly shiny through this year, or do you expect some chinks in the golden armor this year in 2022, some turbulence?
Things can change very quickly. Depends on data, depends on global factors and so on. But the reason I mentioned that this is a golden period is because I have not seen so many sectors simultaneously doing well, for a very long time. This happened for a very short period between 2003-4 and 2006-7. But even there have been, I don't think, real estate was doing very well at that time, which it is not as of now, but it's picking up very strongly. So my point was premised on that. If we start seeing headwinds in sector after sector, one obviously will have to revise one's opinion. But Indian companies have gone through tremendous amount of restructuring, and they continue to do so. Right? It's extraordinary how serious and focused Indian corporate managements are today, even in the mid cap and the small cap space. They're really serious. And it'll take a lot of excesses for a very long time for that focus to go, and you start seeing all kinds of hanky-panky. We are not seeing that so far. The talent pool is tremendous. There is a segment in the market today which is where more and more private equity guys have come in. They are running whole companies today, whether it's a Crompton Greaves Electrical, whether it's Sequent Scientific. But they are very focused. Their one and only one focus is performance. So I can see there is a transformation among the second and the third generation of large business houses. So, and those are templates today. People are changing. I can even tell you there are unlisted companies which were run in a certain way. The old man is saying, well, I want to get listed and I want a high quality board and I want to clean up my act and then come and do an IPO. So I see all of these things as fairly positive, even for somebody like me who has seen this for like almost 4 decades now. And there's no bigger cynic than I am. But I can see this transformation has been absolutely fantastic across the board, sector after sector. So it's a very structural change that I'm seeing in business and in management and so on. So obviously one has to keep tracking it every quarter, every year and so on. But as of now, it's been a great ride, and it's not just a reflection of low liquidity and so on and so forth. A lot of people say, well, if the Fed starts raising rates, what happens? Those are very, very simplistic assessments according to me. I mean, so many of these Indian companies today are actually, world-class exporters, which wasn't there earlier. By exports, we meant the low level of exports the textile companies used to do, and then software, and then API, the pharma companies. Now, in manufacturing, there are top quality exports. The last piece that I'd like to say is that expensively valued, very, very expensively valued, but the quality of IPOs that have come in the last 6 to 9 months have been exceptional. As I said, valuation is a different story. They have all taken advantage of it, but there are companies which are very, very well run. And one of the companies in the chemical space actually exports 35% of its revenues to China. China is an importer from it. So these are the kind of things that I'm seeing where obviously in the market, eventually you will go and buy a stock. You're not bothered about overall what is happening. You find a great company, you buy that stock. So I find a lot of very, very good quality companies today, very good quality management, and they have a really, several years, if not decades ahead of them.
Okay, on that optimistic note, I shall thank all of you gentlemen. Rashesh, Nilesh, Debashish, thank you all very much for your time today. Great hearing your thoughts, as always. Fingers crossed on the budget.
If you like the video, do like, comment, share and subscribe.